Late on December 20 evening, the center extended its ban on 7 agri-commodities. These commodities are wheat, rice, chana, which we call as Bengal gram, moong, green gram, crude palm oil, mustard seed and its derivatives, soyabean and its derivatives. The center had earlier banned this last year, and the ban expired on December 19, but it had promptly extended the ban, citing concerns over inflation. Last year, the center government imposed the ban because edible oil prices were really raging. Prices had doubled by that time, and the industry also was complaining to the government that speculation was one of the main reasons for high prices of particularly mustard seed and soybean. So the government had to act. This year, what probably has forced the government to go for an extension of the ban is that wheat and rice prices are ruling higher. Wheat prices are up by over 15%, while rice prices are up over 7.5% this year. This is one of the reasons why the government has gone and it wants to play safe. But if we look at the prices, mustard oil, palm oil and soybean oil, all these prices have come down. But this has got nothing to do with the derivatives, because these are all internationally linked commodities, and because supplies improved in the global market, the prices came down. However, prices of green gram and Bengal gram are higher compared with the same period last year. One of the concerns for the government is that inflation has been above RBI's comfort zone of 6%. Until November, inflation was over 6%, but inflation dropped to 5.9% in November, which the RBI says down but not out, which means that it is really not confident that the prices can be held at this level. Finance Minister Nirmala Sitharaman told Parliament this week that the central government is keeping an eye on inflation. So these are some of the reasons why the center has decided to extend the ban. But is the ban good or bad? One side, there are people who say that this prevents the small and medium businesses and some farmers from hedging their position. Actually, farmers may not be affected, or they may not gain from this because farmers don't hold big positions. But there are people who argue that probably farmer producers organization could be helped to take positions, especially in the options market. The other side where people are justifying the ban is the high prices for rice and wheat. In particular, rice prices have gained by over $30 in the last couple of weeks. Had the futures on rice been allowed, probably speculators could have taken a position. If you see on the other side, probably this could be an indicator of where rice prices could be heading. There's no doubt rice prices are going up, and it's only start of a bullish market. The extension of a ban is likely to impact commodity exchanges, particularly MCX and NCDEX, the main two commodity exchanges in the country. MCX may not be affected that much because it trades only derivatives in crude palm oil. On the other hand, NCDEX trades on rest of the 6 commodities. What has happened for NCDEX is that its monthly turnover has dropped by half to around 10,000 crore from 20,000 crore in January. That's the impact of the ban on these commodities. What the extension of a ban will mean in 2023. We will have to watch out how the Ukraine war pans out. If there is an end to the war, then there could be easing of commodity prices. Particularly supplies from Ukraine and Russia, which have been held up, will improve. The other aspect is, if the war continues, then there could be problems with the economic growth, as inflation will tend to be high. This is because crude oil and natural gas supplies to some of the countries will continue to be affected. So it's a situation that we'll have to watch out, but probably if the prices ease, where India is expecting a good Rabi crop, there could be some relief for everyone.